We've got another Bloomberg best on this very same topic. He's Richard Franulovich, the senior currency strategist at Westpac Banking. And as I mentioned before, you say the dollar is paralyzed right now.
I would add, and it's flat on its back. Basically, the dollar is paralysed by the fact that every other central bank is responding to higher energy prices and higher inflation generally by raising rates, making currencies elsewhere, overseas, more attractive, whereas the Fed's still affirming a dovish tendency. We're likely to see that again this week. And then on top of that, you've got these renewed concerns about the fiscal solvency, if you like, of the US following the S&P's credit warning. And the questionable...
And that was interesting because that affected the dollar more than it affected any other market.
Correct. The bonds and equities have been somewhat more sanguine about that. But when it comes to FX, it's a game of relative value. And whereas you've got concerns in Europe about Greece and what have you, the bottom line is at the end of the day, the global investment community is voting its feet against the dollar. And so the dollar needs to win fans and win support globally, whereas equities and bonds aren't so heavily focused on that front.
But Richard, is it going to be as simple as what we just heard Nick say, which is that once the Fed starts, stops the QE2, starts the tightening, that's when you see the dollar come back?
I think once the Fed gives the signal that they're prepared to raise rates, we will see an almighty short squeeze on the dollar, and it will have a tremendously large bounce. But it's like
describe almighty to me.
Yeah, very big. We're talking. Well, look at when the ECB suddenly started signalling the need for higher rates there, and markets moved to price in rate hikes from the ECB. The euro basically rallied around 10 to 15 cents versus the dollar. You can see something similar for the dollar versus the euro. But the Fed really needs to move aggressively to get rates up to, say, 1 to 2% before you start to get some rate traction for the dollar. Historically, once the Fed starts hiking rates, the dollar does see a little bit of a bounce. Okay. But you need to see sustained, concerted movement in interest rates in the dollar's favour. Otherwise, the dollar sell-off will resume.
So even if we see, let's say, a 25 basis point hike then at some point by the Fed, that's not the almighty that you're talking about then?
No,
okay.
No. Although that said, the dollar does have one thing going for it, and that is that being short the dollar is a consensus trade. So with everybody short, and then if the Fed does signal the need to hike rates, you will see a big bounce. But as I say, at the same time as the Fed's potentially hiking rates many months down the track, you're probably likely to see other central banks also hiking rates. Okay. So that's why I say the Fed needs to be somewhat aggressive. You really need to see rate differentials moving in favour of the dollar.
Give me your numbers on the dollar. What's your bottoms on the dollar?
Okay, near term, some big round numbers that we're looking for is 150 in the euro, 90 in the dollar CAD, 110 in the Aussie, and perhaps 82, 83 for the Kiwi, and dollar yen probably testing down to 80. That would represent further ongoing dollar weakness, nothing particularly aggressive, but it seems like the market is focused on these big round numbers, and that's where we're heading in the next several months.
But you can't discount intervention at some point?
To support the yen against the dollar, potentially if we get down through 80, but as long as the yen is not strengthening aggressively across the board, then I don't expect to see that happen.
Okay, Richard, before I leave you, though, talk to me about the yuan, because a lot of people thought over the weekend we might see some sort of appreciation in the Chinese currency. We haven't gotten that yet. What do you think is going on? Okay,
well, the policymakers, I think, are slowly coming to the realisation that they should use the currency as an inflation-fighting tool. Premier Yuan himself suggested that as a possibility, as long as the PBOC officials. The focus on the weekend was about the fact that it's a long weekend. They like to surprise markets that way. Yeah. In retrospect, it was never going to happen, but I do expect more concerted and aggressive movement on the yuan versus the dollar.
Okay, they surprised us the other way. They didn't do anything.
Correct.
So, we'll see. Thank you so much. Great to see you.
You're welcome.
Richard Franulovich, as I mentioned, the senior currency strategist at Westpac Banking, a Bloomberg best on the currency markets.